everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It's Friday. Boy, oh boy, we had a really massive issue with Silicon Valley Bank today. Shares are down over 60%. It looks as if many of the venture capitalists pulled their money out of the bank, and it's kind of in a free fall. There's going to be a special meeting of the Fed actually on Monday to deal with this. This could be this could be an issue. This could be an issue going forward because so many of the payrolls in Silicon Valley are at Silicon Valley Bank. So many of the companies that were depending on, access to their cash, may not have access to a cash, at least not at the moment. And this is critical because typically the FDIC insurance is only $250,000 for for any one account. So many of these venture-backed firms have multiple accounts, and potentially could be in some difficulty when it comes to meeting payroll. There was sort of a mini run on the banks. Many of these companies, of course, have to fund their burn rate. They're not necessarily profitable, um, but so they typically have, they typically depend on their deposits very, very heavily. So we'll see what happens, as this thing moves forward. But definitely very interesting when it comes to that. I did short the XLF, which is the Energy Select Spider for which is the energy select spider, the sector spider for the financial sector. Most of the other banks are fine. I think J.P. Morgan and the big money center banks, they don't have that much exposure, but this could be significant because Silicon Valley Bank is not a small bank. It's in the top 20 largest financial institutions, so it's a significant bank, and this also caused the condition of the market to change from a uptrend under pressure to a market in correction. And what happens when there's a market in correction, of course, is that we don't want to make any new purchases. We want to basically move more into cash. I was moving into cash today. I took some profits on my position in GE, which had been doing quite well, and then so I've been basically trimming my positions, and here's kind of where I'm at in terms of my positions. I'm barely down to only four currently. One is the XLE, that's the Energy Select Spider, and that was off today. On, which is a Swiss sneaker maker, and they were down as well. Lego Microsystems, this is where I have probably the most exposure to Silicon Valley at the moment. Symbol on this one is ALGM. It was down 2.57%. And then, of course, I still retain a small amount of GE stock. I didn't sell it all, but I did take profits. And, I did take profits. And I did open a short on the XLF, which is the Financial Select Spider. And my position in that one, it was down, but because I shorted it at 33.15, I'm up a little bit on this trade. I know it's kind of confusing because as the stock goes down, the value of my trade goes up. So that's kind of where I'm at. It's an interesting it's kind of an interesting situation here. So I want to kind of take a look first of all at the Silicon Valley Bank stock, which of course is sort of what's in play right now. Sort of what's in play in the market. So let's see if we could pull that up. Let me see if I can get that. There we go. A little bit of a okay. So there we go. I'm just going to pull up the chart for Silicon Valley Bank. It's the symbol of this one is SIVB. So you would think it would be SVB, but it's not. It's SIVB. You can see here, basically today, this was the drop, really from from about 224 all the way down. Currently, where it's trading at about 106. So this is a serious in terms of its in terms of the in terms of the market. This could be, hopefully it won't be, but this could be a harbinger of the future. So we want to be careful here. We want to be very, very careful in terms of coming into any new stocks. I really don't think it's a good time to be going long, but I think that we might be setting up for some potential shorts. So that's kind of just the warning here. But the warning has come in. We're in a market in correction, and I suspect there might be a bounce on Monday, but I suspect we're probably going to open lower on Monday as well. Let's take a look at the spider, because that's kind of going to tell the tale. The spider is the ETF that covers the S&P 500, and it's significant in that it broke below, and this is what caused the movement to market in correction. It moved below this critical 200-day moving average. That's just this black line here, and this movement below this on heavy volume, as you can see, that's what moved it to this market in that's what moved it to this market in correction. And basically what happens when the market is in correction, you don't really want to be making any new buys here. You want to kind of just get your get into cash as much as possible, and and wait. And also there's probably some opportunities to short, but really not right now. The reason I shorted the XLF is because that's an index fund, and that's why we went into that short. All right, well, let's take a look at some of the questions coming from TikTok. We have Tesla, so let's take a look at the Tesla stock, see how that fared in this kind of bad day on in the market. Let's kind of see how that looks. It's funny. This is a very contrarian stock. It did bounce up today. Why did it bounce up? Well, I think part of the reason is it came down to that 50-day moving average right about there, as you can see. That's sort of where I think we got some support, hopefully. That would be great if we could get some support. That would mean that Tesla will be trading in a range essentially from about this level here, right at about 170 or so, on up to I think really a little maybe 215. This is going to be the new. This is going to kind of be to find the new range of Tesla. Wouldn't be a buyer here, obviously, because we're in a market in correction. We don't really want to be buying long in a market in correction, but definitely something that we can definitely watch there. So interesting. Interesting observation. It may, we may see something go up tomorrow, but that is interesting. All right, John also saying there is actually people in line in California getting cash. Yes, okay, we do have a bank run, probably in some of the California banks. They're going to be cash shy, probably mostly in Northern California rather than Southern California. Of course, I'm coming to you from. Dallas, Texas. Here's what you might want to do. We may have a situation like they're experiencing in England right now, where they're limiting the cash withdrawals from ATMs. So you might want to go and pull out a little bit of money, maybe $500,000. Make sure that you have it on you, because I think that we may get a throttle back on some of the deposit accounts. They may not be able to withdraw money, so you might be careful here. So this is kind of just a precautionary measure. Again, I don't have any inside information or anything like this on it, but I think that we got to be concerned about this, because I remember when IndyMac happened here, and that what prompted the raise of the FDIC insurance from 100,000 to 250,000. So this is something that is concerning, and we have to be cognizant of it. But it's no reason to be excited, overexcited. All right, Doc, thank you very much. Well, You've been talking about the problems with the banks. Do you think JP? So I don't think JP Morgan is on the brink. It's a money center bank. I think it's very well capitalized. Let's take a look at JPM. I don't think it's really on the brink, but I do. But I wouldn't be buying their stock right now. I just wouldn't be buying. I just wouldn't be buying their stock, just because just because it's a kind of a situation where we have to be a little bit careful here. And taking a look at JP Morgan, we did have kind of this sympathy where JP Morgan stock definitely dove down almost to the 200-day moving average, and then it bounced right back. Unfortunately, I didn't catch this one. These are great opportunities to make money when they come down and they boomerang like this. But I do think that even JP Morgan stock is probably headed lower, at least in the near future. So I wouldn't be a buyer here, but and I don't know if I would short this one here. What I did is I kind of went kind of the wimpy way out, and I shorted the XLF, which is of course which is of course the Energy Select Spider. Let's just take a look at kind of three stocks here. Let's look at and just really, this is from the first of the year. I want to kind of compare JP Morgan with the XLF and also with the Silicon Valley Bank SIVB. Let's see if we can, let's pull it back to more recent times. There we go. Isn't that interesting? Okay, well, there's not, yeah, isn't that interesting? Okay, so let's jump on over to that. So we can take a quick look at that. So let's go over to compare um, those um, those those bank stocks. So you probably know I'm not a huge fan of bank stocks. I don't really trade them all that much. But pretty, part of the reason I don't trade bank stocks that much is they typically are very, very close together. You'll notice that JP Morgan and the XLF are very, very close because JP Morgan is such a big component. Now, this, and I don't know if you can see it, this is kind of hard to see. This is the Silicon Valley Bank core. Now, it had been moving lower since the first of the year. This is the first of the year here. First of the year here. It was up and then boom, down. So who knows what's going to happen? But here's the thing: I don't think that J.P. Morgan is necessarily in trouble, but I do think that the XLF, which is the Energy Select Spider, is going lower. I really did it more as a hedge, not as a profit maker. I will close the short basically where I took it out, and I shorted the XLF at 33.15. So that's where I'll be closing it if possible. My UVXY has done awesome last 2 days. Got out of it today. Wow, you think that VIX will inch its way? Yeah, this is interesting. Yeah, I mean, let's take a look at the VIX. Let's take a look at the VIX. Let's see if I can get a read on the VIX here. Let's see. Zero. All right. So this is the volatility index, what they call the VIX, and that the volatility index on the S&P 500. That's kind of what the VIX is. So let's jump on over here to the chart for the VIX, and take a quick look at it. A quick look at it here. There we go. Okay, so basically what happened, we have this huge spike in volatility. This is basically today. As you can see, it's way up to 30. It might get up as high as 35, but I would doubt that. I suspect we're going to come up to about this line. See how they drew this here? See, and that's almost exactly where it came in, this line. So I definitely think we're going to get some, we're going to get some resistance at 30 to 32 here on the VIX. So that's kind of my thinking. So, right now I would probably be, dialing back any speculation on the VIX going higher. I think it's going to correct. Um, you know, and I don't know exactly where it's going to correct, obviously, but I definitely think it's going to correct here. All right, J. Rombal. Oh, I'm sorry, Bob and Doc. JP. I thought you were talking about JP Morgan. I think rates are still going up. I mean, I know that. I wish I think the rates are going to still go up. Let's take a look at the long bond. Let's see if we can. Let's see. Let's look at the XLT. The no the TLT. Mm, okay, so this is the TLT. This kind of gives us an idea of sort of where the long term rates are going. This is an ETF that covers the exchange that covers the performance of the U.S. Treasury bonds, the 20-year bond, the 20-year plus bonds, so the 20 and 30-year long bonds. So there's definitely there's definitely a spike up on those, and that's interesting because there's going to be a lot of demand, I think, for those bonds. People are going to go in. They're going to either be in cash or they're going to try to move. They're either going to be in cash or they're going to try to move into some of the long treasuries. This is really what happens when there's the financial uncertainty. I know that everyone normally says, well, gold is the way to go, but really, when there's these problems, what you see people go into the long bond. So that's really kind of this probably is going to reverse higher. It had been moving lower, but I think that as Powell raises the rates, it's going to move up. So that's just my take on it. But it's a tough one. All right, ABBV. Let's look at that really quick and see what we got there. AbbVie, interesting stock, obviously, and it's an uh, it's obviously a medical stock, but here's the thing: it does look like it got some support at the 200-day line. We came down, we tested, and it does look like it's going higher. But here's what I'm a little bit worried about: in the after hours, we've got it going lower. So with all this turmoil going on in the market, I wouldn't be a buyer here, not because I don't think this can move and can move higher, but because of the overall market, it's very uncertain right now, and I just think you have to be super careful here. I would probably tend to be more in cash and just more in cash that we can get. Writing. Oh, Delta. This is interesting. I'll try to get back on top. This is interesting. Um, I think we might see an oil services bump, but again, right now, when you have these sort of bank panics, all bets are off. You can't really tell. I'm actually holding. I've really scaled back on my exposure, but I am holding the XLE, which is the sector spider for energy. Now it's up in the after hours. I'm not surprised this is the case because typically, when we have these problems, you see people go to the safe havens. Those are being obviously the longer bond and some of the oil stocks. Now, I'm not saying that it's bounced here, but I do think we're going to likely to see this thing move higher on Monday. So I think we're going to see some more action in some of the oils, and this is a good way to play it. The Energy Select Spider and some of the oil services companies as well. Let's look at SLB, which is of course Schlumberger. That used to be called Schlumberger, now it's not. Notice it's up in the after hours too, and I think Halliburton as well. So I think on Monday we're probably going to see at least a small rally in um, in the oils. And the reason why, because, well, there's a lot of things you can cut, but oil is one of the ones that people are going to probably keep. Notice Halliburton is up in the after hours too. So I kind of am expecting a bounce on some of the oil stocks. I mean, if you have to be invested in the market, I think you want to go back with the inflation type stocks such as oil. So I think that's kind of where you want to be. Personally, I'm probably gonna be staying out of the market initially. at least until we get an idea in the first few hours on Monday how it's going. I don't know if I'm going to reduce my positions anymore. I'm only about quarter invested right now, and I did reduce. I was all the way up about 50%, which corresponded to the correct amount for a market in uptrend under pressure. That was what the call was on Thursday. It went to market in correction on Friday, so we definitely had the move there. So that I reduced my position to a quarter position, and so I'm mostly in cash right now. Once again, nothing most exciting. I really wish I could find homes for my capital, but hey, it is what it is. I'm lucky I didn't have any Silicon Valley stock. TK Tankers, interesting company. I like this company a lot, Charles. And oh, by the way, thank you for. I talked with Gavin last night, and I think you'll be very excited about the option course. One of the things about Gavin's options course, and we have a special course for everybody out there, is that one of the things that's great about options is if we come into these troubled times where it's difficult to make progress in the market, what you can do is you can use options. And I have a special deal from Gavin. He's a columnist at Investor Business Daily. Just wanted to put this up here on the screen for everyone so you can see. You can just go to this address, https:// and it's stan.store/Dallas Trading Floor. And if you go there, there's a special offer on the course, on the options mastery course, 50% off. I've taken the course. I paid full price. It's very well worth it. This is a good way to get yourself ready if we come through a little bit of a turbulence in the market. This is a way you can stay engaged in the market and make some money in a sort of in a down market. I'm not, again, I'm not a negative Nelly, but I think we may be going lower. We may go going lower. John basically is on TikTok is saying oil is strong. I agree with him. I agree with him. The reason oil, of course, is strong, very simple, is that even if everything else is going wrong, you still have to get out and go to the grocery store and go to work. And I mean, yes, Tesla is a great company, but the oils are good. Let's take a jump on. I'm going to jump on over to the price of oil just since the first of the year. And this is the West Texas Intermediate. Of course, that's the one that we really follow here at Dallas Trading Floor, because of course it's it's the it's kind of what passes for the price of oil. Currently, the price of oil closed at about 75. As you can see, oil has been in a downward trend. Okay, but and currently it's below the 200-day moving average. That's this black line here. I do think, though, we're likely to get a bump here in a bump on Friday. I mean, a bump on Monday. You see, it was coming down here, but I think with this financial news, I think we're going to see the price of oil come up. It's come up 50 cents. I mean, it's come up about it's come up just a little bit, but I think on Monday we're going to see a bounce in the price of oil, just because, well, it is what it is. It's one of those things. All right. John is also saying he likes UNG here. Let's look at UNG. And thank you so much, by the way, for tuning in on TikTok. This is the Natural Gas Fund. One of the most volatile of all of the commodities, of course, is natural gas. And again, it's been in this downward trend, but that might be coming to an end. And the reason why, of course, is because, well, when inflation kicks up, and I do think we're going to get some more inflation, I don't think that they're going to cut back on the rates at all. I think they're going to continue with the tightening. I think it's going to push the U.S. into a recession, but people will still be driving their cars. So it's just one of those things. I wouldn't be a buyer probably here. We are up a little bit. I just want to see some confirmation I want to see the price of this come above 20 before I'm really interested in it. Right now, relative strength is 2. That means it's really showing a downward trend. But this could be the bottom here. This could easily be the bottom for natural gas prices, so we could see them come back up once again. But I probably would not be a player in the natural gas at this point. But it does look like we may have bottomed here. And then I'm showing this is the weekly chart here, so you can kind of see come down. I think we may have bottomed on the natural gas price. We'll see. The oil is, I'm a little bit more certain with the oil, the West Texas Intermediate at 75. I think that's kind of a floor for the West Texas Intermediate for the oil. But on the natural gas, I mean, you can definitely make some money playing natural gas, but it is tough because it is so volatile. All right, go video. Thank you. Let's take a look at MRO. This is, of course, Marathon. Again, once again, the oils are rearing their ugly head. And it has, the oils have been pulling back, Marathon included, but I think that, come Monday, we're likely to see, a movement up here. It's up in the after hours. By the way, there's 2 Marathon oils. This is the Marathon Oil Corporation, which is the E&P, the exploration and production company. And then there's also, what is it? It's this MRC, which is the convenience and retail. So it's sort of two ones, but they're both excellent. And I do think that we probably will get a bounce. I wouldn't be a buyer until we confirm that we're bouncing higher, but I do like this. I do like Marathon a lot. If you look at the checklist is not where I'd like to see it. This is one of the reasons why you kind of want to wait on this one. You want to wait until it comes above that 200-day line before buying it. So I would kind of take a wait-see attitude on Marathon. I think it's a great company, but I would take a wait-see attitude on Marathon. I think your better bet is going to be in the XLE, which is basically the entire sector. And this one I do think is going to reverse. And I own it. I do think it's going to reverse right at the 200-day line. And as you can see in the after hours action, it's up. So not surprised that at all. Not surprised that it's probably going to move higher. So this might be an easier way. Now, here's the thing about the XLE. It's primarily Exxon and Chevron. That's primarily who it is. So that's what's in that. Okay, let's see. Low valuation oil is strong. Absolutely. Right. Oh, I bought okay, the TLT at 99. Let's take a look for John at the TLT. This is the 20-year bond ETF that corresponds to the 20-year bond. You did great here, by the way. Look at that. Nice gap up. I love seeing this. I mean, I got this. I got a gap up like this on GE, but I didn't get this one. This was a beautiful play. You bought it at 199, so that's 6 up. That's excellent. You got to be real proud of yourself. Look at that. That's a nice. So you basically bought it as it pulled all the way back. Basically, so you bought it basically here. Wow, that's really good. Well, no, I'm sorry. You bought it here. Excuse me. You bought it here, where it made the low on 99. That's excellent. And then, then you had this beautiful gap up here. Really, really nice. You should really pat yourself on the back because that is a very good trade. Just want to show you how I've been trading GE. For some reason, GE has been doing well as of late. With this banking news though, I don't know if it's gonna continue like that, but it's up in the after hours. That's interesting. This is GE. You can see where I bought it here, and then I still have a position in it. It looks like it's moving up after hours. I'll probably be back in on Monday. It seems as if even if the market is weak, we're very, very likely to have a good year for GE going forward. Why? Because they did their spinoff of their healthcare, and you'll notice it's making a higher high. Well, higher high since basically back here in 2017. So it's starting to make a higher high. There's a lot of larger funds that seem to be coming into GE right now. I mean, I never thought I would be touting GE because it's not really a growth stock. It's just kind of there, but it was delisted from the Dow, and then of course they've been under reorganization. Had a very good numbers. They had sales up 7%, but their profits were up 51%. A lot of this is due to the spinoff, though, of the healthcare unit. So, but still, this is one that if you have to be in the market, this is kind of one that might work for you. All right, all right. We talked a little bit about Tesla. Question about do you use options? This is a question from TikTok. I do, but I really think what helps me, and I do use options, absolutely. But what I really recommend is taking this course from um, from uh, uh, from Gavin McMaster. He's the options writer for the Investor Business Daily, and he's now a friend of mine. And basically, if you go through this, if you go through Dallas Trading Floor, you get half off. As far as I know, that's the only time that he discounts it. But so something that you might want to look at. Here's the address. Again, in case you want to, get more information on this. This is www.standstore at dallastradingfloor.com, and that will give you, it's very, very good course. Absolutely well worth your time here on it. So let's see if I can show you kind of what it looks like from the Stand Store. So if you decide that you're interested in taking a look at um, the store, and you go to standstore.com, this is what the page looks like. Let me pop that up here. Oops. There we go. Let's see if it's letting me. There we go. So if you want to see kind of, if you want to get kind of a look see at this options course, which is very, very good. And basically, to get the option course, you just go to www.standstore.com, and you'll see this screen here. Just punch this button for the special discount offer. So pretty nice deal, and I've gone through the course, and it's really a good course if you're interested in doing some options. Options are good, are a good alternative here because we're in a situation where the market may be headed lower. If it is, options can help you make money in a downward trending market. So very good stuff there. All right, let's look at Ulta Beauty, ULTA, and see if I can get that up for you. Ulta Beauty. And for some reason, the beauty stocks, I don't know why, Elf Beauty too has been doing very, very well. So, again, I don't quite understand that, but they say that during recessions, one of the things that really holds up well are beauty products, and I found that out. People, they don't have a lot of luxuries, but one of them is looking good. So this is Ulta Beauty here, and if we look at the daily chart on that, we can see that it's really holding that 21-day line very, very well. It's up after hours. This is a very expensive stock, 521. I'm surprised it hasn't been split, but it is what it is. Relative strength of 93. That means this is in the top 7%. It was up huge today. They had very good earnings. here, their earnings were excellent, and if we take a look at the kind of what's going on with their earnings, you can see that indeed they have done very, very well, and their sales were up 18%, and their profits are up 24%. And this is the, looks like one, two, three, four. This is the sixth quarter in a row that they've had these profit increases. So very, very strong stock. And the question is, could you buy it here? I would like to buy this on a. I would like to buy this on a uptrend if possible, but we could definitely buy this. We could definitely buy this here. So not a bad stock at all. But I probably will not be buying Alta Beauty just because of the condition of the market. All right, everybody. Well, thank you very much for taking the time to take a look at my show again. Again, of course, that special offer from Gavin with it's really, really good if you want to. If this market's going to be more difficult, unfortunately. So it's going to be tough. Um, but I definitely think options are a way to go, especially in a downward trending market. Charles, probably one last thing: metals, gold, silver, etc. I mean, I know that everybody, you know, metals are the thing for inflation, but I have to be really honest. I don't think I don't think it's a good time. I want to go if I'm going to be in the mining area. I want to be with a major international miner like FCX. That's Freeport McMoran. They produce a lot of gold, but they're not primarily a gold miner. The problem I see in this area, to be honest, is that even is rising costs. I know that everyone is talking about how it's a good time to be in gold and silver. I think it's a good time to be in cash and oil. That's my opinion. I think those are far better in a downtrend um, than gold. But it has been moving higher. Here's the thing with Freeport McMoran. This is one of the best of the breed. It's only 69 relative strength. I mean, if we look at the area, metals and mining, um, you know, it's a good area, but again, I think that I don't think this is as a good an area as it's been. So I'd be super careful in the miners. I would be. I'd be careful in the miners. And with that, well, thank you, everybody. I hope you have a nice weekend. Here's what I think. I think we're going to see more of a downtrend. Unfortunately, more of a downtrend come Monday. I definitely think we're going to see. We're gonna see probably a little bit more pullback in some of the banks. So I would be very cautious right now in terms of going into the market. I would be kind of, and this is really hard to do. I think you're going to have to kind of sit on your hands a little bit here, um, because I think we're going into a period that's going to be very trying. So this is one of the reasons why I recommend Gavin's course and doing some options trades because I do think that if this gets going, we're going to get probably a little bit of a downward trend here. So just be very careful. Um, Also, it's a good idea probably to have $5 to $1,000 of cash on hand at your house. I'm not telling you to do that, obviously, but there have been cash shortages in the UK that I've heard about, and I know that there's issues in California right now. So be very careful. I definitely think that we could see a reduction in some of these banks giving allowances for cash per day. So you want to be careful and not get caught without cash. Anyways, well, thank you, everybody, and I will be back on Monday. Everybody, till then, happy trading. Happy trading, everybody. And one thing, of course, I always ask: please smash that like button. Not the small like button like that. The big like button like this. So smash that like button. It really helps us get out there to everybody on and on TikTok. Hit the like button too if you want to get a hold of that special offer on the course, just go to stan.store/Dallas Trading Floor. And if you do that, you'll be able to get it for a very nice price. And I definitely think it's well worth it. So until Monday at 5, happy trading.